So the week started with Apple touting its iPad mini and how great it is and people getting all excited about it. But then the week ended with Apple showing exactly why the iPad mini may not matter so much. Rob, why is that?
They don't sell them for very much and they don't make much profit. The other thing is that the sales weren't great of tablets. Sales increased 25%. This is Apple, so 25% growth of everything.
It's terrible.
It's awful. Yeah. The phones grew twice as fast.
And that's the point, really, is that the phones, which they sold something like 27 million of them in the quarter, is roughly what people are forecasting they'll sell for the entire line of iPad minis in a year.
Exactly, yeah. And it's not just that the phones are growing faster, it's also that they sell for more, they tend to cost more. And also Apple makes about twice as much proportionally on sales. In other words, the margin is about twice as high on phones as it is on tablets. So,
and the iPad mini also is basically, even if they do sell the 30 million of them, one analyst at Bernstein was saying it adds about $1 to the share EPS.
Earnings a share, in
which is less than 2% of what they're expected to make.
Basically nothing. Yeah, it's strategic more than anything.
I just want to bring in a comparison here, though, which Rob wrote about before earnings came out. Apple and Amazon.
Well, and Amazon came out with results yesterday too, which were pretty bad.
Amazon made a reported loss. Right? Apple makes a giant profit, huge amounts of cash flow, not quite as much as people expected, and of course what's priced in matters, but the comparison here is a admittedly huge company with big margins, strong growth, strong cash flow, and a multiple.
You strip out the cash, it's under 10, right?
Well, and so a multiple of forward earnings, price earnings, if you strip out cash under 10, if you leave cash in, Apple's huge.
And Amazon trades where?
Amazon trades 100, about 100.
About 100 on a forward.
And Amazon has been promising, or at least investors have been kind of assuming Amazon will turn these infinitesimal margins that they have into something much bigger in the future. Now, Apple does that now, and yet Apple...
And huge margin. I mean, the phones, as we were talking about, the iPhones are somewhere around 50% margins.
50%, yeah.
Yet Apple, Amazon makes another loss, shares go up today. Apple makes another huge profit, not quite what people expected.
Shares are flat.
Shares are flat, even down a little bit. It's a conundrum. If Amazon delivers, maybe, but it's the way we put it. Jam tomorrow, Apple gives you jam today, and yet nobody's giving them credit for that.
Well, the problem with Amazon too is that you have to believe that they're investing their money wisely. Okay, they're not making profits, but that means they're investing money for growth. The problem is Amazon had a huge loss in the quarter because they basically had to write down their entire investment in Living Social, their Groupon. So you have to wonder, okay, what were they doing going into this? And then to write down their entire investment, what, a year later?
And and so even though Apple's margins are a little bit lower on the iPad mini, they're still way better than what Amazon is producing.
Yeah, about 20 times or 30 times more.
All right, we will leave it there, and we'll be back with more Breaking Views next week.